Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Switch5.tv, and welcome to our favorite segment, Week in Focus. And this week we are focusing on Polkadot, especially after the announcement that the DOT token is going to have a hard cap at 2.1 billion DOT tokens. That's what we want to jump in. Is this enough? If you want to know more about that, please keep watching. But before I proceed, please note that I am not a financial advisor. If you do require financial advice, please approach someone who is trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and it's also not meant for UK audiences because the UK authorities do deem anything crypto related to be extremely risky, and they're trying to protect you just in case you end up losing your funds. That said, guys, let's come back to this week in focus where we are focusing on Polkadot. So picture Polkadot as a grand infrastructure plan for Web3, a multi-chain hub aiming to connect disparate blockchains, let them talk, share security, and scale in harmony. But like any ambitious infrastructure project, Polkadot is lagged behind hype, battling scalability, adoption inertia, and economic design that many saw as lacking discipline. Now, late in 2025, it is firing up a new set of upgrades, tokenomics overhaul, and builder incentives aimed at reclaiming relevance. The question is that, can Polkadot turn its grand promises into real momentum, or is it just another project chasing features while the rest of crypto zooms past? We will try and answer that question. If you are not subscribed, guys, for content like this and much more, please subscribe to our channel. We do bring you content that you may possibly not find anywhere else, and we are one of the few channels that brings you non-conventional content that again you may not find anywhere else. So to start us off, what is Polkadot? Polkadot is a multi-chain sharded protocol that allows multiple blockchains or parachains to operate in parallel with shared security provided by the relay chain. It is built for interoperability, governance, modularity, and scalability. Key technological features include parachains and relay chain architecture, which enables specialized blockchains to run their own logic or requirement, but leveraged by Polkadot's shared security and consensus. Next, we have governance and upgradability. Polkadot is a strong on-chain governance known as OpenGov or referenda, allowing protocol changes without hard forks. And it also boasts what's known as cross-chain message passing or XCMP, which is for interoperability between parachains, staking, and nominated proof of stake or NPOS, which is the system they use. Holders stake their DOT or nominate validators to secure the network and earn reward. And I think this is where things have been going wrong, because it was mostly whales who were benefiting from this. The majority of small holders, we were not benefiting from Polkadot's staking mechanism or model, which I think has been benefiting whales, and they've been voting for things that only enrich them. That's why people have been deserting, investors have been deserting Polkadot, hence the poor performance of the DOT token, because I think it's been performing poorly up to now. So let's look at the 2.0 upgrade or set of upgrades which are being introduced. We've got elastic scaling, more dynamic assignment of cores or computational units to parachains, scaling resources up and down based on demand, agile core time, where more flexible core time allocation is being introduced, meaning parachains can get access to core computational resources in a more dynamic way rather than the rigid slot auction, which I think has been a waste of time. If you think otherwise, or if you debate that, please let me know in the comment section. I would happily engage you with my own reasons why I think the slot auctions mechanism has not been working effectively for the Polkadot network itself as well as for the wider ecosystem. The next planned or upgrade being introduced is asynchronous backing, where it's aiming to reduce latency, letting parachains produce or finalize blocks in a way less tightly bound to every relay chain block. This helps throughput and reduces bottlenecks. And finally, we got the Polkadot Hub, a new EVM compatible smart contract chain or hub launching in Q4 of 2025, lowering friction for developers used to Ethereum's toolchain. Again, we've had so many parachains who have been claiming to have solved the EVM compatibility of Polkadot smart contracts, but to date, they have not delivered anything. Case in point, you've got Moonbeam, and to a certain extent, you had the likes of Akala and so forth saying they were EVM compatible, but that is not worked. Yes. Let's move on to the use cases for Polkadot. It is used in DeFi and lending or DEX protocols operating across parachains or directly on Hub once EVM compatibility is live. Cross-chain infrastructure, where such bridges or messaging, asset transfers, or tokenization of real-world assets will take place. Scalable services that will need best of compute or state via elastic scaling rather than committing to a full parachain slot long term. Next, you got governance-rich apps whose state and upgrades benefit from Polkadot's strong on-chain decision framework. That will be a hell of a gamble, because their governance process, maybe at this point now where they are introducing a maximum cap, maybe we can now say safely say there's been some independence, but previous votes on governance have been a joke, if you ask me. And finally, you've got interoperability of smart contracts, especially after a hub goes live, allowing developers familiar with Solidity and EVM to deploy more easily on Polkadot. What about the DOT token itself, price performance and recent behavior of that token? Like I said, I'm not going to change my mind. It's been behaving poorly to date. Polkadot, recently, the Polkadot DAO, or Decentralized Autonomous Organization, passed referendum 1710 to cap DOT supply at 2.1 billion DOT tokens, that is. Previously, there was no hard cap. Inflation issuance was 120 million DOT per year. Following this and other technical upgrades like elastic scaling and proposals such as proof of personhood, DOT saw short-term volatility but also renewed interest. Price has been forming around $4 to $4.70, with resistance sitting at around $4.50 or somewhere thereabouts, with supports near the $3.60 to $3.90 depending on charts. Some analysts have been eyeballing potential of the DOT token reaching $6.30 in the near term, in terms of upside, way to face some resistance with long-term targets toward $10 or more if momentum and adoption picks up. Maybe that will happen now that altcoins are coiling up. But Polkadot, the DOT token, it hasn't been good. There's been a multitude of factors, from leadership to focus and the so-called parachain auctions, those projects that won the auction slots. They've been a huge letdown, if you ask me. I'm sure I'm not the only one. There have been so many people who have deserted the Polkadot ecosystem because things have not been running well, and there's been a gaping hole when it comes to leadership. If you ask me, yes, technically, that's it. But if you're running a project as big as Polkadot, you want to have people with a certain business acumen to actually make this ecosystem grow. Right now, it hasn't been. I think people have just been looking at their own pockets. That's what I think. I can't see it any other way. I know it's harsh to start accusing some of the popular and reputable individuals such as Gavin Hood, the co-founder of Polkadot, but man, it's almost like a dereliction of duty from his part because things have not been running well at all. Anyway, let's take a brief analysis of key items here of the $2.1 billion capped supply. What does this mean? Well, referendum 1710 passed with strong support, approximately 81% to impose a hard cap of 2.1 billion DOT. The tokenomics move ends perpetual inflation. It also introduces step-down emission schedule every 2 years, that is issuance reduction. This will reduce DOT issuance gradually. And the potential effects of that hard cap, the advantages include the fact that deficit or supply discipline often welcomes institutional interest. Scarcity helps value propositions because there is less dilution. Predictability for stakers, validators, ability to plan economic models. This also aligns Polkadot more with hard cap narrative like Bitcoin, the likes of Cardano, BNB, and Solana. I think Solana is debatable whether it's capped or not, which is attractive in inflationary macro climates. If we look at the disadvantages of this 2.1 billion cap, if demand doesn't grow in usage, staking, transaction volume, supply cap alone won't produce price appreciation and could lead to overhype and disappointment. And lower issuance means lower inflation or lower inflationary rewards for stakers initially. It could also affect yield expectations. Some current stake or reward models may need adjustment. Very large holders might gain disproportionate influence if supply tightens too much and demand bottlenecks. So that means there won't be any change compared with what's been happening there. Let's move on to Polkadot Hub, the EVM contract platform. The hub is aiming to allow EVM compatibility. This is a big deal because it opens Polkadot to all the tool chains, devs, liquidity, and composability flowing through Ethereum-style ecosystem. It lowers friction for migration or launching dApps. It might also bring projects from other chains who want EVM tools but want better interoperability and governance and or scaling. But you got some challenges here. You got performance, competition from other EVM chains, securing developers, attracting liquidity. If Hub doesn't offer strong advantages, for example, gas, user experience, cross-chain bridges, and incentives, many might stay where they are. What's the point in moving? My main question though is with this move of the Hub, Polkadot Hub, why now? Why didn't they do it from the beginning? It's almost like this wasn't well thought through. People were more about trying to prove how smart they are instead of developing and designing something that actually works. That's where I am at. They know better. I don't know any better, but I'm still allowed my opportunity to share my criticism where I think it's warranted. And I think the Polkadot developers have dropped the ball here. Yes, they are doing the right thing now, but why wasn't that put in the first place? People say things are difficult, is this, is that. That much I get, but I can tell you those are all excuses because once opportunities leave, the same opportunities might never come back round again. So I don't know what this is going to achieve. It's almost like they're playing catch up. Moving on to elastic scaling and Polkadot 2.0 completion. Elastic scaling means dynamic allocation of cores so network resources can stretch or shrink with demand. This helps reduce congestion, improve cost efficiency, and allow better scaling scaling without permanent high overhead. Agile core time and asynchronous backing, likewise designed to reduce latency, may actually improve throughput and also make resource use more efficient. These are core to Polkadot catching up on chains that have outperformed it in speed, transaction cost, and developer mindshare. For example, Solana and Ethereum layer 2s. So the competition is already miles ahead, and Polkadot are just thinking or starting to move now. There's a lot of ground covering to do here. What about DeFi Builders program? Is it going to develop anything, or is it going to deliver anything at all? Well, it was launched during this quarter Q3 by Velocity Labs and partners, and the purpose is a 12-week structured support, grants, mentorship, liquidity incentives, audits, and so forth for DeFi project building on the Polkadot hub. If you tell me about DeFi projects on Polkadot, the first one that comes to mind is a Star Network and Akala Network. Where did we get with those? Yeah, rug pulls in slow motion, unfair criticism in some quarters, but you got to call a spade a spade. And this is critical for bootstrapping the DeFi Builders program, that is, because they will be looking at TVL, developer talent, real use cases, and not mere parachains or speculative tokens. About time, if you ask. So, will the revised AdCap max supply reinvigorate the Dotcoin, the Polkadot ecosystem? Both of them? Well, here are some potential strengths for this revised AdCap or revised maximum supply. It creates scarcity, which historically tends to improve market sentiment and buy interest if demand is there. It makes the Dotcoin more attractive to long-term holders and institutions who prefer stable, predictable monetary policy. It helps differentiate Dotcoin from other inflationary tokens or chains. Possible weaknesses or limitations include the fact that tokenomics alone may not be enough in this case. If user growth, app usage, TVL, fees, developer interest don't grow at the same pace, the cap is just cosmetic. It won't change anything. I also believe that the ad cap must be balanced with staking rewards that also integrate supply constraints. If rewards shrink too quickly, they may hurt validators and nominator incentives. So what are my final thoughts on this? Well, Polkadot is in a crucial inflection point. Implementing Polkadot 2.0 components, passing important governance like the capped supply, building for EVM compatibility via the hub, supporting DeFi builders and so forth. That is the current state. That's what they're trying to do. Price is modest. The Dotcoin is trading within the $4 to $5 range, well below all-time highs, which was, I think it was well over $60 during the last bull market. But technically, it's showing some strengths, and what's happening might be the start of improved sentiment. But there are still some risks involved here. You got execution risks, where implementing elastic scaling, hub, and so forth is non-trivial. Delays or imperfect implementations could dampen confidence. There is so much competition as well, so it's not going to be a walk in the park. Main layer ones, modular EVM plus interoperability focused chains such as Avalanche, Cosmos SDK chains, showy, Solana, and so forth are also upgrading or pushing in. Polkadot must deliver not just features but performance, developer-friendly user experience, as well as security. And there are also some market risks, what macro downturns, regulatory issues, or crypto markets losing steam, which could also hurt Polkadot as much as other chains. Will it succeed in what the team is trying to do? Polkadot seems to check many of the right boxes now: governance discipline, scarcity, scalability upgrades, dev incentives. If all arms, that is hub plus 2.0 features plus DeFi builders program, if they all align in deployment and attract real usage, it is a good shot at a revival. But success likely means regaining developer mindshare, not necessarily reclaiming all past glory, but becoming a serious contender among the top ecosystems again. So we may not go back to the previous all-time high. After all, Polkadot has been the blockchain equivalent of a Swiss watch: beautiful engineering, sophisticated features, but often outpaced in showy races. With 2.0, the supply cap, hub, and programs like DeFi Builders program, it's polishing its gears and hoping the mechanics finally match the marketing. If Polkadot can deliver on throughput, developer user experience, and real TVL, it may go from quietly sophisticated toolbox to frontline contender. Otherwise, it risks being admired for craftsmanship but passed over in speed. In short, Polkadot is no longer just potential, it is auditioning for the big league. Next few quarters will tell whether it's promotion time or another season on the bench. What are your thoughts, guys? Let us know as far as Polkadot 2.0 is concerned, as well as the recently announced DOT token maximum cap supply at 2.1 billion. Any thoughts? Let us know in the comment section. Yes, I do hold the DOT token. Do you? Until the next one, FD for Sage5.tv. Signing out from you. Bye.